Can you afford it? That's the question on everyone's mind these days, especially when it comes to buying a new car. Let's talk money, cars, and Tesla, the company that never stops surprising us with bold moves and headline-grabbing announcements. On February 19, 2026, Tesla slashed prices on their headline-grabbing Cybertruck, sending shockwaves through the auto industry and sparking conversations everywhere. When a company cuts prices, it's not just about a shiny new truck. It's about your wallet, your monthly payments, and the bigger economic picture that affects us all. These price cuts are meant to get you to spend, to tempt you into the showroom. But is it really a good deal for you or just a clever marketing move? We'll break down what changed, what it means for your finances, and how to make the smartest decision, not just for Tesla's sales, but for your future and your family's financial health. This isn't just about a car, it's a signal about the economy, the EV market, and the pressures everyday people face when making big purchases in uncertain times. So, what did Tesla actually change? How much money are we talking about? And what does it mean for you, your budget, and your long-term goals? I want you to walk away thinking like the CFO of your own life, not just a fan caught up in the hype or a shopper dazzled by discounts. When you control your money, you control your destiny. Let's get started and see if this Tesla shakeup is really the opportunity you've been waiting for. Denied? Not today. Let's get to the numbers, because that's what matters when you're making a big purchase like this. Understanding the details behind the price tags can help you make a smarter decision and avoid surprises down the road. Tesla recently introduced a new dual-motor, all-wheel drive Cybertruck at $59,190, calling it their most affordable model yet. This move is meant to attract more buyers who have been waiting for a lower entry point into the Cybertruck lineup. But is $60,000 really affordable for you? That's a question only you can answer, based on your own budget, priorities, and financial goals. What seems affordable on paper might not fit your real-life situation. The top-tier Cyberbeast also saw a price drop from $114,990 to $99,990, a $15,000 cut. That's a significant reduction, and it might catch your eye if you've been considering a high-end model. But here's the catch. Tesla also dropped the Luxe package, which used to include perks like full self-driving and free supercharging. Now, those features are extra, so you'll need to factor in those costs if they matter to you. So, while the sticker price is lower, the overall value may have changed. It's important to compare what's included now versus before, and see if you're really getting more for your money. Always look at what you're actually getting, not just the price. Features, warranties, and long-term costs all add up and can make a big difference in your ownership experience. For most people, a car is the second biggest purchase after a home. It's a decision that affects your finances for years, so it's worth taking the time to get it right. Don't let a price cut trick you into a decision you can't afford. It's easy to get swept up in the excitement, but remember to stay grounded and realistic about your budget. Make sure your choice is based on a solid financial plan, not just the thrill of owning something new. Talk to a financial advisor if you need help crunching the numbers or setting priorities. Remember, a lower price doesn't always mean a better deal. Stay sharp, do your homework, and make the choice that's truly right for you. Why is Tesla cutting prices now? It's not charity, it's strategy. The timing isn't random. Tesla is making a calculated move in response to shifting market forces and growing competition. They want to boost demand because sales aren't as strong as hoped, and the EV market is slowing down. More automakers are entering the electric space, and buyers have more choices than ever before. Inflation has squeezed budgets, so people are holding off on big purchases like high-end electric trucks. Even those interested in going electric are thinking twice about spending extra money right now. Tesla's price cut is a direct response to cautious, cost-conscious consumers. They know that to keep cars moving off the lot, they have to meet buyers where they are financially. This isn't just about the Cybertruck, it's part of a bigger pattern. Tesla has been adjusting prices across its lineup, signaling a shift in their overall approach. Tesla recently launched a cheaper Model Y to attract more mainstream buyers. They're hoping a lower price point will bring in families and first-time EV owners. But moving from luxury to mainstream is tough, especially if you want to keep profits high. Cutting prices means tighter margins, and that's a big risk for any company. Think of it like a bakery selling cupcakes instead of fancy cakes. They need more customers. To make up for lower prices, they have to sell a lot more cars. Tesla's price cut is a sign they're adapting to a tougher market. The company is trying to stay ahead of the curve as the industry changes rapidly. Supply and demand still rule, even for Tesla. No matter how innovative the brand, they can't ignore basic economics. This move is a clear admission. They need to change to stay competitive. The pressure from rivals and changing consumer habits is real. Watch what they do, not just what they say. The real story is in their actions. Here's another twist: government incentives. For years, buyers got a $7,500 federal tax credit for going electric, a huge discount. But that ended in September 2025, making EVs instantly more expensive. Without that credit, many buyers hesitated or chose cheaper gas cars. Tesla's price cut is their way of absorbing the loss of that incentive and keeping buyers interested. This shows how government policy can directly impact your wallet and company strategies. The EV market was fueled by incentives. Now companies have to compete on real price and value. Tesla's move isn't just a sale, it's a reaction to a major policy shift. Always factor in the bigger picture when you see a price drop. Policy changes can change the math overnight. Tesla used to own the EV world, but now the competition is fierce. Every major automaker, Ford, GM, Rivian, and more, has electric trucks on the market. Buyers have real choices, and that means companies must compete on price and features. The Cybertruck's price cut is Tesla's way of staying relevant as rivals like the Ford F-150 Lightning and Rivian R1T gain ground. It's not just about beating Ford. It's about surviving in a global market. With aggressive competition from China and beyond, Tesla can't charge a premium just for being first anymore. They have to prove their value every day. This is what healthy competition looks like, and it's good for you as a consumer. More choices, better deals. Don't buy just for the badge. Compare everything. Tesla's move is defensive and offensive at once. The market is changing fast. Let's talk profit, because that's what keeps Tesla alive. Tesla's high profit margins set them apart, but price cuts put those margins under pressure. Selling a truck for $15,000 less means $15,000 less profit, unless they cut costs just as much. Tesla hopes to make up for lower margins with higher sales volume and new revenue streams, like software and future robots. But those future profits are just that, future. Right now, Tesla makes money by selling cars. Cutting prices is a gamble, more sales, but less profit per vehicle. Investors need to decide if they believe in Tesla's long-term vision or worry about short-term strain. It's a bold move that could pay off, or backfire. For buyers and investors, understand the risk. Today's price cut could mean tomorrow's financial challenge. Tesla is betting big on the future. Will it work? Only time will tell. Watch closely. So, what does all this mean for you? More competition means more power for you as a buyer. Tesla's price cut might make a Cybertruck possible, but don't get swept up in the hype. An $85,000 truck is still an $85,000 truck. Can you truly afford it? Run the numbers. Monthly payment, insurance, electricity, maintenance. A price cut doesn't change the basics of smart financial planning. For investors, this is a lesson in separating hype from reality. Tesla's story is innovation, but the reality is tough competition and tighter margins. Decide if you believe in their long-term strategy. The market is shifting. Stay informed and make choices based on facts, not emotion. Whether buying a car or a stock, knowledge is your best asset. Make every dollar count. Here's your practical lesson. Separate price from value. The price is just a number. The value is what it means for your life. Don't let a discount cloud your judgment. Ask, if this was always the price, would I still want it? Can I afford it? Compare features, reliability, and total cost, not just the sticker. Think about your other financial goals: retirement, education, debt. Every dollar spent is a dollar you can't invest elsewhere. A price cut is a test of your discipline. Focus on long-term value, not short-term hype. That's how you build real wealth. Here's the bottom line. Knowledge is power. Understanding why Tesla cut prices is more important than knowing the new price. This insight protects you from hype and helps you make smart decisions. Always ask why, about sales, about stocks, about everything. The more you learn, the less you fear. Become a lifelong student of money. Read, listen, ask questions, and talk about finances. The more you know, the more confident you'll be, no matter what the headlines say. Don't follow the crowd. Follow your own goals. Keep learning about personal finance, investing, and the economy. Every lesson is a tool for your financial future. With the right tools, you can build security and wealth. You have the power. Just choose to use it. You are so approved.